Oh man, so Bitcoin breaks through 47,000 and Phantom is sitting at $1.45, and today is a good time to be talking about Phantom. But in today's video, we'll not be talking about the price action. We're going to be looking at the token distribution. Yes, the token distribution of Phantom. How are the tokens issued? Who are they issued to? How are they being distributed? And how will that affect the price over the next few years? If you're investing in Phantom, you're going to want to know this. If you've not watched my video, which I've done previously, we've done a detailed breakdown of the tokenomics, which I'll link up here as well for you guys to watch. But this is more focused around the distribution, okay? So even if you're not investing in Phantom, this is going to be a really important video for you to watch and understand to do this analysis on your own coin. So sit back, make sure you hit up the like button, make sure you subscribe. If you like my perspectives, consider my course member live stream. Links below to the pinned in the pinned comment will be the link to the Discord server. Over there you'll find out instructions on how to get yourself set up for the members live streams. There you'll get access to me to ask me questions on your most important topics, your favorite coins, critique your portfolio, macroeconomics, psychology of trading, technical analysis. You can ask me all in those members only live streams. Right now, what we want to cover off here are the tokenomics. And some of this you guys will be familiar with, but it's also important that we recap this from time to time just to make sure we fully understand what is going on. So some of you who are a bit more advanced, it's a good recap for you. For those of you who are new to crypto, maybe you've just bought in because your friends told you, or you just found yourself into crypto, remember, new crypto investor and trader is born every single day. It's important that you understand these fundamental blocks of how to invest in crypto. Now, the first thing in terms of tokenomics is you need to understand, I've said this multiple times, that price is simply a reflection of your supply of tokens and your market cap. Okay, very important. It's your market cap you need to focus on. Now, if you increase the supply of anything, what happens to the price? The price goes down. If you reduce the supply of things, the price goes up. So we need to understand that. Now, with Phantom specifically, we know that on day one when they started the project, a total of 3.175 billion Phantom were initially issued. Okay, that means they were minted at launched and they were created in the smart contract. Okay, then they decided to go through some allocation. Now, how can we verify this? Well, one easy way to do this for any coin, if you type in a coin, let's go Phantom into coin market cap, you can head in. Oops, I just clicked the wrong one there. Let's go to Phantom. Hit enter, and you will see here in the top right, 2.55 billion is circulating from the max supply of 3.175. Okay, very important. So the 3.175, 2.55 billion is circulating. Now, to put this into perspective, things like Avalanche, Luna, Ethereum, they don't have a max supply. Theoretically, they can continue to mint, create new tokens, and release them into the market. Now, that has its pros and it has its cons. Now, the obvious con, which we've just discussed, is if you keep creating more tokens, you're devaluing your existing tokens. It's very normal, right? It's one of our complaints about the US dollar. They can keep printing the US dollar, and therefore that creates inflation, and you're weakening your currency over time. So this is one of the complaints about Ethereum and a few other layer one solutions. But Phantom have capped theirs at 3.175 billion. We can see 80% of that is already circulating. This is really important because you can have a token which has a fixed supply, fine, but there's only 10% circulating. That means another 90% is still to come into the market. Okay, so now most coins have something called a token release schedule where they tell you how those tokens are going to come into the market. But every time those tokens are released, going to put downward pressure on the price. So if you're holding a token that has 10% circulating supply, every time there's a little rally, somebody's going to sell, and somebody's going to sell, and somebody's going to sell. More tokens are going to be released. More tokens are going to be released, right? And it's going to constantly prevent you from getting any bullish momentum to the upside. It's a weight on upwards move, the way down on that. It's really important that we understand that. Now, the next thing to look at is to say, okay, from the 3.175 billion, what happened to it? They created 3.17 billion at launch. What did they do with it? Well, what they did was they did the following. They gave 40% as a token sale, okay? That was to public and private sale investors and private sale bonuses. We'll cover some of that off shortly. And these have no vesting schedule, okay? So these, as soon as they were created, could have been dumped on the market. So if you're buying on day one in that 40%, there's obviously a risk that those 40% of people don't hold, or if the price goes up very quickly, they sell really quickly and you get rug pulled. That's always the risk with newer projects. Obviously, now if you're investing in Phantom, it's a mature project, you don't have that issue. But this is an issue you have to look out for new projects, right? Things like the Squid Game token, which was a massive rug pull. Got to look at these things if you're investing in meme coins. Really important. Something like ApeCoin, which has just come out. You need to understand this because if you're wanting to invest so early on, you need to understand these dynamics. Then what happened was 15% was allocated to advisors. Okay, these were advisors of the project, probably people like Andre Cronje and others, and these had a 3-month lockup. Okay, so what that means is for 3 months they cannot sell their tokens, and within 3 months they can sell them. Not long, to be fair. It's a pretty low lockup period. You expect a little bit longer for some advisors. 10% was then allocated to the founding team, okay? So these would be the key developers, key people in the team, Michael Kong, I assume, and a few others. And this allocation had a 24-month vesting period with monthly, okay? So each month they had a cliff and then a 24-month vesting period, okay? 3.6% was allocated to a strategic reserve, okay? Now, these again have no vesting schedule, and then 31.4% is a big chunk, was reserved for staking rewards to be distributed daily until 2024. Okay, so these are the staking rewards. This is what keeps the system running in terms of those staking their Phantom. How do they get their rewards? Okay, very important that we understand that. Okay, good stuff. Now, of this initial 40%, how was it sold, right? What happened? Well, this is what happened. On February 2018, you had your first seed where the team managed to raise $1.6 million. Okay, they did that by selling 3.15% of the total token supply, the total 3.175 billion, and they received 100 million Phantom. They sold 100 million Phantom. Okay, then in June, they went ahead and they did another a quarter of the supply, guys, 25.35% of the total supply, which was 743 million Phantom, and they raised $20. That was in the first private sale. Then in the private sale number 2, they raised another 12.84 million, selling 367 million Phantom. That's 11.6% of the supply. And then finally for the public sale, where you and I could have got in, right? These are all private. This is why sometimes these games are rigged, right? These big influencers can get in at these price points, and then they're talking about Phantom or these other projects for a long time. It's obvious why they're talking about this, right? Phantom or Luna, all these projects, when they're getting in at these levels, I mean, look at the price they're buying in at, guys. They're ridiculous. They're buying at 3 cents per Phantom, right? And then the market get in at this point. So if you were super switched on, you weren't given an allocation, you didn't know the founders, you managed to get in, you jumped in, then you can get this launch at 4 cents on June 2018. Okay, that was look at the availability of that, guys. 1.57%. And this is where things get a little bit unfair, but this is not just Phantom. This is everything. This is all of crypto. This is how it works. You get an allocation. The majority of that 40% was never available to the public. It was just 1.57%. Really important that we understand that. Okay, so all of this money then got raised, right? So all this money goes into a pot, 1.6 plus 23 plus 12 plus this or whatever, 40 million plus goes into a pot. And then what do the Phantom team use it for? Well, the Phantom team have shared that they're using 50% for research and development. Now, this all pretty much goes into looking at the Lachesis development, looking at maybe Phantom virtual machine, paying the devs, research costs, hiring researchers, all of that fun stuff. You then get 25% for operation costs. I mean, that's just your normal stuff, right? You have an office, you have computers, you have other bits and printers, maybe. Some people, why are you doing? And all sorts. That goes to your operational costs. You then have 10% to pay fees to list on exchanges, okay? And then 15% for marketing and brand awareness. This is particularly important for Phantom because they didn't have too much massive VC backing. They've had to do a lot in terms of marketing and brand awareness to build the attention that they needed. Okay, so that's what they went ahead and done with the funds, okay, that they raised from the initial 40% out into the market. The next thing to then look at is what is the initial supply breakdown? So the initial supply breakdown went 40% to investors. Okay, we saw 28.62 go to the founders of the project, and then 31.38% went to pre-mine rewards and airdrops. Okay, and again, that was of the initial supply. That's the initial supply breakdown of how it went out. Now, what we want to then move on to look at is the liquid supply curve. And again, for any project you guys are invested in, really important you watch this. If you watch any of my tokenomics videos, we've done one on Render, we've done one on Decentraland, we've done various. Go check them out. There's a playlist set up for just those. you will see that I always look at the token, the liquid supply curve, or what is sometimes called the token release schedule or distribution. Always find that chart. It will look like something like this. And in essence, what it's doing is saying from now until the end, what is our planned release schedule for the tokens? How are we going to put the tokens into the market? Because remember, there's still 20% of tokens here on FANTOM, which isn't too bad, by the way. It's actually really good. That still need to go into the market. And this is going to tell us how this goes. If we go to where we're at now, which is Jan 22, you can see here that as of Jan 22, this is, how they're going to split out the curves. This is how they're going to spit out the tokens. And they're going to spit out between rewards, which is for your staking, your token sale participation, advisors and contributors, strategic reserve, team and founders, and then you get your total. Now, currently, at the time of recording, the daily expected distribution of FANTOM is 682,000 FANTOM daily released into the market until 2020. And this is the kicker, right? So everything is looking pretty good. We've got 80% circulating supply, a fair split between the team, nothing to complain about. But the end point is the worrying point. And the worrying point is that this supply is going to run out by 2024. And so we're sitting here at 2022. We've probably got about a year and a half till we have to start worrying about this. But the FANTOM team have to worry about it now. And that is that these tokens will run out. You end up having 100% circulating supply, which is great for the price, right? Because it's now going to become a deflationary coin. The supply is restricted. Price can start to move up at a quicker rate. But the problem is then how do you incentivize your network people, right? The people running the system. Because at the moment, people developing on the system are now getting paid in FANTOM tokens. Remember when we spoke about how Michael Congas cleverly incentivized total value locked as a metric against releasing FANTOM tokens? So if you're a developer and you hit a certain metric in terms of your total value locked on FANTOM, you release some FANTOM tokens. And that comes from that pot. But if that pot is finished, then we have a problem. Now, there are two solutions here, and Michael's kind of touched upon this at times, which shows that he's aware of it and it's something on his radar. Of course it should be. This is key. This is critical of a project. So he has to come up with a plan and has to communicate that plan very correctly. But the two kind of obvious things are this. Either one, transaction fees are going to go up. Transaction fees in terms of the gas fees on the FANTOM system would go up. They've got room to go up because they're pretty cheap, but it's not ideal when people are used to a certain transaction fee. That could go up to pay for the validators and pay for the work. The other option is to remove the supply cap, because currently it's capped at 3.175 billion. Will they then increase that supply cap to say, okay, we're going to go to 4 billion or we're going to go to 4.5 billion? See what I mean? And that could then you give that as a pot to then create the to give to as incentives. Either way, this is not ideal. This is an issue, and it's something that Michael Kong and the team will have to address and update us on. Otherwise, everything else in terms of the liquid supply curve, the tokenomics, the distribution schedule looks really healthy, and I'd argue healthier than a lot of other coins right now. Okay, so overall, tokenomics, I'd rate them as very good. We do have this one issue, which is a concern, which we have to address from the FANTOM team. Hopefully, within the next kind of 12 months, we hit something around a plan. Because the markets will start to get worried if there is no solution around that. So there you have it, guys. There is an update on the FANTOM tokenomics and the liquid supply curve. As always, if you're invested in FANTOM, this is something you have to be aware of. If you're not, this is the kind of analysis you need to be doing on your high conviction plays. If you're holding a serious amount of any coin, you don't know the distribution schedule, you don't know the liquid supply curve, you've not looked at the tokenomics, make sure you watch my videos. I explain to you exactly how to do it. You can watch me do it for some tokens. If you like my perspective, you can head over into our members only courses, click the link below in the pinned comment to head over to our Discord server, which is free, and in there you'll find how to get to our members only live streams where you can ask me questions. We can do this kind of analysis together on some of your favorite coins. We can look at your portfolio, we can discuss macroeconomics, ask me about my psychology, we can look at TA and how I do TA. It's an open session for you guys to ask questions directly to me. As always, guys, smash up the like button and subscribe. What I'm going to do at the end of this video is I'm going to link up on the end card the video to the full tokenomic breakdown video, which I did a while back on FANTOM. Make sure you go watch that. That marries up nicely with this video, and by the end of it, you should have a full 360 understanding of the tokenomics around FANTOM. Thanks for watching, guys. We'll see you in the next one.